my mind. Looks like we're in the click, just living the
What is going on, you guys, and welcome back to another episode of Stock Battles. This is our July 2021 edition. This is the series where Mark and I each pick a stock and we give a case for it, and it's up to you guys, the viewers, to decide which one you like better, and you share that down in the comment section below. What's going on, Dad? Happy Canada Day, belated.
Happy belated Canada Day to you, Brandon. Looking forward to this battle. And as we talked about previously on the last one, some people have commented and said, hey, can we get an update on the previous battle? So that's something we're going to do today, and they have some mixed results there, but I think everybody will find it quite interesting. And I'm looking forward to today's battle for sure and see how things play out.
Yeah, well, why don't we start with that? We'll quickly recap a review of our previous 4 battles, because this is going to be our 5th battle, and what you're looking at on the screen is just a table of sorts recapping our previous picks going back to March. We assumed in this case that we had $1,000 invested in each, and we can see, unfortunately, I don't know how this has happened, Dad, but looks like you've etched me out so far in this battle with, in this case, it looks like a total return here on the bottom. You have a total gain of $473 across your picks. Mine sitting at $266. So I guess I still got lots to learn from you when it comes to this whole investing game.
I will say this doesn't really come as a surprise to me, and I think in the previous battles I may have mentioned that, and I just jinxed myself because I know investing in the short term is so tight. We went March, April, May, June, July, so we're 3 months into this. Interestingly, when we go back to 3 months, if we look at, I'll just have a quick explanation of how the table works here. But if we go back to the March battle, I picked Costco, you picked Facebook, and on the right hand side there it simply tells you what the dollar value is, assuming we had each invested $1,000 on that first pick. Facebook, as we thought, you tend to pick the more aggressive companies, and I tend to pick the more blue chippy type things. So as you might expect in that short time period, Facebook has in fact outperformed Costco. Now, if we go to March 25th, I picked CVS, you picked Alibaba. Well, you can see clearly there my company is up 13%, yours is down 5%. If we go to May 7th, Suncor versus CNR. I'm a bit surprised at this one. I thought CNR would have performed better as well. I hear there's an airplane flying by your house at the moment.
Yeah, you got that. Yeah,
over your house, I hope.
Right over top.
This is a pretty close battle. Where I'm up 3%, you're down 3%. Let's call that pretty flat. And then on the May 25th battle, the most recent,
a clear winner.
Yeah. On this one, the good news is on this one, you're not in a negative period. In fact, you're up, I believe, 2 cents. As when I printed this chart off earlier today.
We'll take it. We'll take it.
So this is kind of fun, and just a quick reminder to everybody when we're doing these battles, part educational, and hopefully you can learn from the the analysis that we do. But on this really short time period, it's a bit of a crapshoot. So yeah, I'll take the wins when I can get them, and we'll see if I can add to that streak today.
We sure will. And why don't we dive into that? We're gonna have you start off with today's pick. As always, guys, if you're enjoying this video, please don't hesitate to drop a big thumbs up. That helps out the channel more than you would know. And if you are looking for more stocks to buy, learning more about the stock market, don't forget we always have our Investing Academy as that first link down below. But Dad, why don't you take this away? I'll get you up on the screen here. Where are you? There you go. The floor is yours.
Let me kick it off. And I'm going to pick a company today that is a Canadian company, and it trades at a reasonable dollar value. I know a lot of times people are concerned about the high priced, and we pick companies that are $300, $400, $1,000, or $2,000. The company I'm going to look at today is Bausch Health Companies, and the ticker is BHC. It trades on the Toronto Stock Exchange. Now, this company also trades on US dollars on the New York Stock Exchange for those of you who are interested in it and have a US dollar account. Currently, I'm going to talk in Canadian dollars now. The current price is about $36.88 at the time I prepared this. Bosch has a market cap of around $13 billion. So it's a real company, but it's certainly not one of the big mega caps that I often talk about. Quick sort of summary of what Bosch does for those of you who don't know. Most people have heard of Bausch & Lomb. They're big, they're huge in the eye care space. And so there are 3 main areas: eye health, gastrointestinal diseases, and dermatology. From a revenue perspective, where do they get their money from? Well, consumer products makes up the biggest chunk of their revenue at about 38%. The next largest, global vision, eye care at 25%, global ophthalmologist prescriptions at 19%, and then global surgical at 18%. as I mentioned, and I'll say at the outset here, this is a very unusual pick for me. First of all, Bausch is a company that for the last number of years has done very poorly, and they are losing money year after year after year. So for those of you who think, well, gee, you look at the Costco's or the Microsofts who are constantly churning off profits, why would you go with a company like this? Well, this is a battle, and I'm swinging for the fence on this one here.
Wow.
Those fighting words. The main reason I'm looking at this right now is this could turn out to be a real turnaround play. And for those of you who are a little bit older or were investing not that long ago, you may remember a Canadian company called Valiant Pharmaceuticals. Well, Valiant went through a real a challenging time, and they were very much out of favor. And in fact, they jacked up the price of a couple of key prescriptions, and they were very much frowned upon, to the point where they changed their name from Valiant to Bausch. And part of that is just to kind of change the history. And for many newer investors today, you probably wouldn't be familiar with that. Whenever you're investing in a company, and if you look and they say, there's been some shaky stuff going on in the past, you might want to look at that, because it's not an uncommon thing for companies to do. In any event, with Bausch, for the last number of years, their performance has not been good. They were hurt by COVID, as you might imagine. This is a company that relies on people going into clinics, I guess, to get eye work done. A lot of surgeries were canceled during 2020, of course. Another thing, people stayed home, which means they weren't going through contact lenses, which is a big part of their business. So every element of their business basically suffered. They are coming out of that now. If we look back at earnings, the earnings have been steady as far as a top line, but they have, as we can see by the chart we'll throw up here, they've been losing money, as I said, year after year after year. They've actually been trading in quite a range for the last 5 years or so. Nothing too exciting there. And to top it all off, they don't pay a dividend. So, all of these things, you say, well, what the heck are we, why would you be interested in a company like this? Two main reasons. Number one, they have announced that they have an upcoming spin-off, and we'll talk about that in a second. And there has been an increase in activity amongst activist shareholders, and often when you get that type of activity, you can see it used as a catalyst to see things happen. And we're going to look at that in a little bit more detail here in a second. Let's start off first with the spinoff. So August of last year, August of 2020, the company announced that they are going to be spinning off their eye care division, the Bausch & Lomb section. They will be continuing as is the existing entity with the International, RX, Salix, Ortho, and their diversified segments. If we look at a timeline of this spinoff, as I mentioned, it was announced in August of 2020. Originally, they had put a finishing time on this deal, this spinoff, as 2022. Well, the market did not receive that very well. With the updates that have occurred, they've moved that timeline to late 2021 now, and the last I heard is sort of they're targeting in the August area. Of course, on something like this, there's never a definitive time. My thoughts are, though, this may be a time, there may be this catalyst, because when companies are spun off like this, if it's done correctly, the term we use is it unlocks value. And you can often take an entity, divide it into two different pieces, and the efficiencies of each of those will actually increase the overall value. So the sum of the parts, can be greater than the market is valuing at it right now. So looking at it purely from that perspective, as a spin-off, I think there may be a catalyst that will help increase the value of this company, at least in the short term. Second major thing I want to look at is activists. And as I mentioned, there's an increase in activist investors' activity here. In fact, to this point, about 30% of the outstanding shares are owned by well-known activists, such as Carl Icahn's company, Paulson and Company, Value Act, Glenview, Golden Tree, Asset Management. They've essentially banded together and said, if this company does not take quick action and start making things happen, they're going to step in. You could anticipate a proxy battle. I think they have, amongst the group, I think they have two seats on the board of directors right now. Typically in a case like this, they're going to lobby for more. I think back to Procter & Gamble just a few years ago, where they became very involved and made material changes in the company. So expect that to come down the pipeline. I've also read that there's a possibility that this spin-off might shift over to a SPAC deal. So rather than going sort of more the traditional route, a SPAC might buy that. How that's going to affect things, I'm not sure, but certainly with the excitement that we've seen around this type of investing vehicle recently, that could also be a catalyst for some increased price there. I want to focus for a minute on debt. Anytime you're looking at a company, you can look at the positives, you can look at the possible catalysts, but you always have to look at what the downside is. And I know astute investors will say, well, gee, look at the debt this company has had. And if we put a chart up on the screen here, which we show going back to 2012, there was a significant increase in debt going up to about 2016. And that a lot of debt still remains on the books. In fact, as of today, they're still carrying about $30 billion Canadian in debt. You will notice, though, there has been a steady decline. Also, if we flip back to the chart we just showed a couple of minutes ago, Brandon, it does show that since they announced that spinoff, the upcoming spinoff in 2020, they have made a concerted effort to take chunks of debt. There's been that debt down payment going on since then. I see that as a real good, strong effort to instill investor confidence, and also, of course, anytime you pay down debt, it improves the viability of the company going forward. Very critical in the event of the spinoff. Next chart I want to show you here is just from the debt perspective, for those of you who are worried. They have a bit of a holiday. It doesn't mean the debt's going away, but in 2021, 2022, 2023, there is no debt coming due. So this does give them time to go through these corporate changes that they're undertaking right now without the fear of having to come up with the extra cash or take that out of cash flow in the near future. A couple of other positives. Number one is that they are continuing to spend on R&D. A pharmaceutical company, you really can't stop that R&D expenditures. And despite the issues that they've been facing, they are continuing to focus on the research and development to make sure that their pipeline keeps full. And the second part of that is their pipeline. They do have a very good pipeline that barring anything horribly unforeseen, that should continue to produce or create value for the company and some confidence going forward. So as I said, this company is very, very unusual for something that I would buy. This is a battle. I'm going to swing for the fence here. And although the risk on this is much higher than I would normally want people to take, if this is something that piques your interest, if it falls into your risk tolerance, then it might be something to take a look at. And we'll see how it does up against your pick, Brandon.
We will see. And my pick, I guess we can transition into that. Thank you, Dad. My pick, excuse me, not everyone's going to like it, and I already know that's a fact. So I'll just get that out of the way right off the bat, which may have you winning the battle, even with a company such as Bausch. But hey, right. You know what? It is what it is. We're just displaying the obvious here for everybody. I'll take over the screen because my pick for today in July 2021 is the company British American Tobacco. The ticker that we're looking at is BTI. Note that this is a company that trades on the New York Stock Exchange, so a U.S. company. This company is actually based over in Europe, as you can tell by the name. But today the shares are trading at $39.17 USD. Note the 7.43% dividend. Your stock had absolutely no dividend, Dad. Mine's looking at a nice 7.4% juicy yield there. So hopefully that gets a little bit of the votes in my favor. But for a brief overview on this company, for those that are not familiar, this is one of the largest producers of tobacco in the world. In fact, if we just put up a little chart here with market cap, one of the very common comparisons they'll get is Philip Morris. We're all familiar with Philip Morris, but as we can see by this chart, the blue line is British American Tobacco. They sit at a market cap of about 89 billion. That is lower. It is a smaller company valuation-wise relative to Philip Morris, but at the bottom part of this chart, what I find is quite fascinating is that they do actually pull in more revenue. They're one of the largest, if not the largest company in the world, definitely in North America, when it comes to net sales, sitting at $35 billion in net sales. I'll pop up on the screen just a chart to familiarize yourself with some of the brands that are known within this company. You're going to recognize some of these names, especially if you are a cigarette smoker, such as Newport, Camel, Pall Malls, Lucky Strike. Obviously, on the left side of this chart, something that we're seeing more and more in the modern day is spaces such as non-combustible, or what we could call it vaporizers would fall into this category with a number of vaporizing brands. You do also have the chewing tobacco such as Grizzly, which is still an option or a choice for many tobacco consumers out there. But what I want to start this presentation off with is really taking a look at the company's financials. And to me, when I look at these financials, although the company does get a bad rep, it's hard to argue with some of these numbers. As we'll take a look in some of these highlighted areas for you, one of the ones that sticks out to me big time is the expansion of their margins. And this is both on a gross margin level as well as their operating margin. But in particular here, I've highlighted gross margins, which over the past decade have grown from about 77 to 78% to sitting today at 84%. This translates directly down into their operating income, as well as we see down towards the bottom of this page, we see cash flow as well, seeing a nice significant uptick. This is one of the many reasons why they're able to sustain such a powerful dividend today. Again, just to confirm with you guys, that's a 7.4% yield with ample cash flow coverage in order to fund these dividends. I took a look actually across the board across the industry to kind of make somewhat of a comparison among some of the other peers. And other tobacco companies such as Philip Morris, such as Altria, which of course are probably their main two competitors, they actually have picked up significantly off lows. Both of these are trading at PEs of about 20, whereas BTI has yet to see this recovery within the industry. And if you take a look at the price to earnings multiple, which I'll actually just zoom in or highlight for you guys, this stock trades at a price to earnings multiple of 10 times. In fact, to look at a couple more valuation metrics such as price to book, price to sales, or price to free cash flow, we're actually seeing attractive numbers across the board when we compare to their closest peers. So I do totally understand, and I know you'll agree with me here, Dad, this is an industry that is not for everyone. In fact, it's a very controversial one at that. But in my opinion, the consumption of tobacco and cigarettes, that isn't going away anytime soon. I'm having trouble speaking today for some reason. I don't know what it is. But you will hear people saying this is a dying industry. I tend not to agree. In fact, I came across a couple of data points or projections. I have a couple of sources here, but this is one saying that they expect the tobacco industry to grow at 1.8% going through to 2028, with the number of smokers rising on a global level. Keep in mind, this is not just North America. You got to think globally, where these companies sell their products. Smoking is somewhat, it's a far bigger norm in certain areas such as Europe and Asia. I mean, we kind of get that, although we are kind of trying to get off that here in North America. Here's another chart from Statistica with a more aggressive growth projection. They're projecting a compound annual growth rate of 4.8% in the entire industry. So to me, I do firmly believe that this is going to be an industry around for the long term, whether people like it or not. And companies such as British American Tobacco and really all of the major players in this space, what I feel they will do is, even if the traditional smoking, sticks like actual a cigarette is tending to kind of drop off, they will just adapt and change to adapt to the market in finding other areas such as non-combustible, such as the vaping areas or chewing tobacco. They've already got these big distribution networks. They've already got the wide moat. They've already got the big plants and facilities to build up, build and produce all of these products. We saw a good example. I mean, it's not the greatest example because I think they're losing money on this, but Altria made a deal with Kronos Group, one of the marijuana producers, to help with the distribution there. And that's a great example to me of the options that these companies have in order to, again, adapt and move and merge around with the changing attitudes and the changing consumption habits of the audience. So for that reason, guys, again, to see the stock with a 7% yield as the stock has really come down, to me, this is a very clear value play. The 10% price to earnings ratio, it's hard for me to not think that BTI, British American Tobacco, is a buy. And that's the stock trading again today for $39.17 USD. And that'll wrap it up there, for my pick. And I can't help but say, even when I was preparing my stuff for this video, Dad, I said, I already lost this pick. This is not going to be a fan favorite. This is a sin stock. Yours, I guess, isn't the most. I have a fighting chance. I have a fighting chance at least.
Yeah. It's funny because as you were speaking, I was thinking of a few things that jumped out at me. First of all, from the financial perspective, you have a company that is very solid financial. My pick is quite unstable financially in certain aspects right now. So that's an issue. Just to speak to a moment about, and you identified it obviously, the ethics of investing and controversial investing. And certainly, obviously, the tobacco industry is one of those investments. And I worked for a lot of years in the industry with clients, and everybody has their own level of things that they're willing to accept. And so, as an advisor, my role, I didn't feel, was to pass judgment on other people's ethics. And if someone said, I don't want to invest in the tobacco industry, absolutely, let's look elsewhere. But for those who said, gee, here's an investment opportunity and I'm okay, like you pointed out, I'm so thankful I didn't start smoking when I was younger, because who knows, it's really hard to kick the habit. I might still be smoking today. Always thankful for that. But people do smoke, and globally, the trend isn't going down; it's going up. So we can't really pass judgment. Although I know there will be negative comments, and that's fine. It's a big community; everybody has different thoughts on it.
Everybody has the right to their opinion. Absolutely, that.
They do.
Sorry to cut you off there, but yeah, that's a great point.
Yeah, and there's certain things where you just have to be, here's the information, and then each person can take that and judge it for themselves and do with it what they will. I note, as we were talking there, in our monthly, in our private membership group, we have a list of highlighted stocks every month, and in our June newsletter, BTI was one of the companies that we just pointed out there for those who are interested in that type of an investment. I think this is going to be a good battle.
It'll be a good battle, and hey, you guys can place your votes by commenting down below. It just came to me as you mentioned that last little part there, Dad, is like, these stocks are not, again, by recommendations to you. We're not telling you, the viewer, to go out and buy these stocks. Absolutely not. We know nothing about you, but we're displaying two options that for the right type of investor may warrant looking into further. And hopefully we've done a good job of explaining the reasons and the thesis behind why we would consider that. If we did achieve that goal, I think what we could ask for is dropping a big thumbs up on the video. That helps out the channel, as I said, more than you guys would know. And yeah, great point. We have our monthly newsletter coming out for our members in our private membership group, and we got our first live session, as you noted. We're having live sessions within the academy. It's going to be so awesome. We have experts in their respective fields going to be teaching all active students. You can learn all about that down below. But hey, today's video is about the battle, and we're going to have to tally up the votes, and most importantly, other than the votes, we're going to have to see how the results play out when we do another review or another recap to see which stock ended up doing better.
I think the best thing that can happen for me is if they move that spin-off date up till maybe September rather than October or later in the year. So the earlier the better, in my opinion. So we'll see. Next update, we'll see where we stand.
We'll see where we stand. Well, hey, thank you everybody for tuning into our video today. Don't hesitate to leave us a comment down below. Give us a vote on either side, who you guys prefer. Make sure to give a thumbs up down on those comments so that they can bump them up to the top and we can see them. If you're not already subscribed to the channel, we post videos like this every single week. And as we mentioned, we have all sorts of stuff that you can learn about through our Investing Academy, which is that first link down in the description below. Any final thoughts, Dad?
No, I'm just so thankful that we're able to do this, and for all you who watch us and comment and give us thumbs up, just thank you so much. And this is just so much fun to do this and take
it's a
these
blast.
Concepts and put them on the air. So thanks for watching, for sure.
Put them on the air.
Is that what this is? The air?
We're not on the air, I don't think.
That's old. Maybe that's old term for putting it out there so people can watch on the air.
Gotcha.
For those of you who are old enough, if I said put it on the air, does that mean anything, or is that something that's been lost?
I would say put it online, put it online, put it live. I don't know. On air, it's more of like a TV, like you're on air on. I don't know.
We'll find out. What do people say?
Yeah, but thank you guys so much. We're having a total blast doing this. We're gonna keep doing our thing here as long as you guys keep watching the videos and enjoying them. Hey, we couldn't ask for any much more. Thank you guys all for watching. Dad, good to see you.
Good to see you, Brad.
We'll see you.
And we'll see you in the next video.